Remember the name, Warren Wealth Management. My next guest is Marcus Warren, and he's the guy who comes in here. He's a great resource as far as not only taxes are concerned, of course, wealth management is concerned, insurance, all the things that go into your retirement. So, Marcus, today we're going to talk about the pros and cons of stocks and bonds,
That's
correct?
Right. Yes.
Okay,
yes.
so and the ultimate goal here, balancing the portfolio. So I'm going to open up with this one, balancing the portfolio. Why is that important? We hear that expression a lot. Why is that important?
Well, it's important because, there are a lot of investments out there, right? And so if you start with stocks, for instance, so you have stocks, which is basically, small slice of ownership in a company. And the good thing about stocks is that over the long term, stocks can have returns that can be fantastic, right? But at the same time, there's a lot of risk that's involved with stocks. And really, when you think about the equity markets and the stock market, there's generally two types of risk. You have your unsystematic risk, which is basically the risk of having all your eggs in one basket, right? What could possibly go wrong with just owning one stock, right?
Okay.
Of course, a lot could go wrong. Enron,
Yeah, there we go.
Yeah, there you go.
Ouch.
and then you also have what's called systematic risk, which is basically the risk that's just inherent with the market. You have depressions, recessions, terrorist attacks, wars that cause the whole market to go down, especially if you have a lot of stocks. So you can see, or you can have a lot of volatility if you just own any kind of stocks. That's why they tell you to diversify. And so when they talk about diversification, they're talking about, you need to have stocks in different industries, have some in the communications sector, technology sector, manufacturing sector. So there's that diversification. But then there's also bonds, right? You need fixed income or bonds. And so what are bonds? And so bonds are basically ownership not ownership, but loan, when you loan a company money, right? And, bonds can provide that stability in the market or in your portfolio where it's still a little bit volatile, but if you generally hold a bond until maturity, you're going to get all of your money back. And so bonds provide that foundation or fixed income, that foundation in someone's portfolio. So it's good to have, a little bit of bonds, a little bit of stocks, things of that nature.
Okay, so from what I'm understanding here, stocks, you're looking at high risk, high reward, possible high reward, but a high risk as well.
Yes.
And then bonds more of a sure thing, and thus you want the balance. And again, we've talked about this a lot. As you grow older and maybe your appetite for risk is less, you want that maybe more bonds, less stocks? Is that the methodology, or
yeah.
More complex than that, I'm sure?
Yeah, generally speaking, yes. There's what's called the rule of 100, right? Whenever you're thinking about how to balance a portfolio. And the rule of 100 basically states that you take the number 100, you subtract your age, and whatever's left is what you should have basically at risk or in the stock market. So if you have the number 100, you're 65, you're left with 35, about 35% of your portfolio, so to speak, should be in the market where it's subject to the ups and the downs. And that's just a general rule. Obviously, if you're more risk averse, you'd go, more heavier on the fixed income side. If you, throw caution to the wind, then maybe you go more into the equity markets. And it's interesting too, John, because we're in this quandary where, the stock market, although it's been volatile as of lately, but it's at all-time highs, right? Mm-hmm. And then you have bonds or interest rates, which are at all-time lows. The 10-year Treasury right now is paying like a 1.5%, so you can't really get a lot there. And bonds and interest rates have an inverse relationship. So as interest rates go up, the value of that bond will go down. And we're at a period of time where the market is at all-time highs. Interest rates all-time lows, and if we see the market start to dip as interest rates rise, you can see both stocks and your bonds lose value. And so as you get closer to retirement, you have to understand these things, plan for these things, right. Make sure you sit down with a good fiduciary advisor to guide you along.
And I recommend, again, Warren Wealth Management. So let's talk about alternatives. You mentioned stocks. We talked a little bit about bonds. And I know this is just a thumbnail sketch, but what about alternatives? Are there any other options for those who want to invest, want to get ready for retirement? What other recommendations?
So you have, of course, real estate, whether it's commercial, residential, multifamily. You can own it directly. of course, indirectly through what are called real estate investment trusts. That's a good way to have assets that aren't correlated with stocks and or bonds. There's annuities, not the variable annuities. You know how I feel about variable annuities, not a big fan, but fixed annuities, fixed indexed annuities, immediate annuities, they can provide some stability, and plus it also can provide income for life. If you're really risky and you want, you like to go to Vegas all the time, maybe there's, you can invest in cryptocurrency or, gold or silver, because those things go up and down all the time. And so there's a lot of alternatives out there. You just need to make sure you have some sort of system and some sort of plan.
Marcus, you mentioned Enron. Do you see with your clients, and obviously if you had a crystal ball, it's hard to tell what stocks will do, or you'd be a billionaire many times over. But with that being said, do you see ever the other side of that? I'm sure that we've all seen clients or have friends who got hurt on a stock. Maybe they got in too late, maybe too early. Yeah. But have you ever seen like someone who, man, they just captured that, lightning in a bottle, and it's like all of a sudden that stock went whoo, and they hit it. I mean, does that happens as well, right?
Yeah. There's a guy named Elon Musk. That happened for him.
He's done all right.
Jeff Bezos, happened for him. Zuckerberg. No, the issue with the average individual investor is that emotions get involved. So even though we look at Jeff Bezos or a Elon Musk or a Zuckerberg, and we see that they had their company stock and it basically skyrocketed, it doesn't go in a straight line. It goes more like this, right? And that causes the individual investor who may think, you know what, I'm going to place my bet, because that's what most people do. They place their bet on like Facebook, and it goes up for a little bit, but then it goes down in the doldrums for, a year and a half, and people are like, I guess it's not coming back, and they jump out, and then it skyrockets. And so those emotions get involved, and it causes people to do the wrong thing at the wrong time, and unfortunately, John, they do it all the time.
Yeah, and you have strategies to avoid those kind of emotional decisions at Warren Wealth Management. For someone who'd like a conversation with you, 15-minute conversation, you do these all the time. How does it work? Yeah,
so call the number that's there on the screen, or you can really go to talktomarcus.com. If you go to talktomarcus.com, my calendar pulls up immediately. Quick 15-minute phone call to find out where you are, where you want to be, and see if we're a good fit and we can help you get there. It's that simple.
Marcus Warren Show. I wanted to mention that too. Podcast, if you're Spotify, Apple, wherever you listen to your podcast, you can catch the show, right?
That's it. You're right.
Man, what a wealth of information you are. All right. And plus, what a great looking jacket. Can we put that camera on there? I mean, this guy is so GQ. My goodness. Yeah, there he is. Marcus Warren again. Give him a call today. And Marcus, I know today was stocks and bonds, but whether it be taxes, you want to talk about the insurance.
Yes.
You're worried about medical bills as you grow older and get ready for retirement. You handle all of that because it's very balanced, all under one roof. Sometimes you have to go all over the place to find a tax expert or a wealth management expert. You do it all.
Yeah, we do it all, from tax planning, Social Security maximization, all in investment management. We do it all. A lot of times people work in their own silos as far as insurance companies, investment advisory firms, things of that nature. It's all under one roof. Makes it a lot easier, a lot better for the client.
Again, Warren Wealth Management. He is Marcus Warren. Thank you for being such a great resource. Appreciate it.
Thank you.
Good information. Balance that portfolio. Coming up here, have you ever heard about someone, or not heard about someone, maybe you have a friend who actually lost their hearing within a day or two, maybe even overnight? It happens, believe it or not. And Heiser Hearing Institute is here with a patient named Holly. We're going to hear her story next on Wave 3 Listens Live.